Kia ora whānau and Sin Chow, and welcome to another episode of Get a Job and Get Healthy with Costas Enterprises. I do apologise. I know it's been a long time since I've done this, but I have wanted to do this for a little while. So today's episode is all about the Sharesies KiwiSaver. You guys have been loving my Sharesies videos, the KiwiSaver videos, so let's do a deep dive. So first and foremost, you can find me on all my socials at the Kiwi Don. You can also find me on Instagram and Twitter at that same handle. And you can also find my website, www.costasenterprises.business.blog. And you can hit me up through my email, doncostas@gmail.com. That's DON for Nike, COSTAS@gmail.com. You can also check out our website. Me and my partner have a business. We make 100% pure coconut wax candles, as well as other handmade gifts as well. That is www.unyengarden. That's A-N for Nike, Y-E-N for Nike, GARDEN.com. So Unyen Garden, so peaceful garden, basically in Vietnamese. And you can also find us at @onyengarden_gifts on Instagram as well. So what are we talking about? We are talking about the big change that Sharesies launched a couple of months ago. The reason I haven't done a video prior to that is I kind of screwed up the way that I was supposed to do this. And so that's why we are now doing that. So as you can see, my total overall has jumped quite a bit since last time. It's basically up about 16,000, but that's also inclusive of my investment returns as well. We are not going to go into the investments this time. I will do that next time, so you will see that a little bit later. We are going to talk about the KiwiSaver and what you need to do in order to access this. So we are talking the US Sharesies Base Fund. So what that means is, for the first time in New Zealand KiwiSaver, rather than you just putting it into a fund where it's managed by someone else and they pick every single little thing, you don't get a chance to say, hey, I want my money to go into the S&P 500. That is what I wanted. That is what I was calling for, and I was hoping someone was going to do it. Sharesies have delivered. Now, I know I should be saying right from the start, yes, you should, no, you shouldn't. It's completely up to you. I am not a financial advisor. I'm just sharing what I've done. So that's the main thing. So first off, you can see that I've been with Sharesies KiwiSaver. I entered it on the 1st of March 2024, and I had $86,263.03. Now, as of today's date, I currently have in my KiwiSaver, and this is the money that I've put in, $98,048.87, meaning that my investments have grown $17,000 in a year, or just let's be real, over a year and a half. So let's not sugarcoat it. We're not trying to clickbait or anything like that. We want to be completely open and transparent. But as you can see, that is up 17.27%. Now, I did start off with a whole lot of New Zealand shares. I also looked at a whole lot of New Zealand ETFs and also included some US ETFs that they had as well that were managed by the Smart Fund. So Smart Shares is basically a New Zealand version that lets you invest into things like the US 500, but as Smart Shares. So we're going to go down. As you can see, there's all these recent activities. They've given me some extra things. Now, the biggest change was this one here. So I changed from the US. I changed from the large growth Smart Shares Fund, which was basically it was the lowest fees, but also the highest growth out of all the ones that they'd previously offered. As soon as I saw this, I jumped into it. So when they launched the Smart Shares US500, this one here, I opted into it, and for about a month, I didn't see anything. I found out because I contacted them, and I was like, hey, what's going on? I don't see anything. I thought I'd changed my fund. What had happened? If you don't know, and this is the be aware moment. If you have smart shares, if you've got Sharesies and you've got a KiwiSaver, before you start seeing any change, you need to sell or add more money into your KiwiSaver. Now, what I mean by that is I sold my original base fund and a lot of my other investments that I had in KiwiSaver, and then sort of once I'd sold that, then it rebought the ones that I had on hold. So basically, if you go, I'm adding this, it will go, cool, we're adding it, but we won't do that. We'll only do that when money comes in, like new money comes in, or when you've sold your investment and then that money gets retransferred. So, for example, you'll see the Vanguard total stock market here, brand new one I've done. I've only got 9 cents because that's all that's come in from this little $3 that I've got here. So I haven't put any new money into KiwiSaver yet. I will be doing that soon because don't forget, if you do put in at least $1,500 of your own money, and this includes when you're employed, so you don't have to add an extra $1,500, you will get your entitlement, which is, it used to be about $550 from the government. They have slashed it to half that. So it's about $250. So it's a bit of, it's a bit gutting, but that's what it is. So once I put it into the US 500, I saw my money drop to 37,000. I was like, oh my God, what the hell? And I had 70,000, 80,000 sitting in that fund. I then relooked, it's under USD. So like most shares under Sharesies, if you invest in USD, the ones that you see here are all USD. Okay, I do have a couple of New Zealand shares, which you will see the dramatic change in those. So you can see the New Zealand shares here. I've got Westbank Banking and I've got ANZ. So those have the New Zealand money, and that's why their investments are quite high compared to the 3,000 here. But when you work it out, basically the amount that was put into Westpac and ANZ was also, put into like Microsoft and all those other ones. So we're going to break down what we've done. We only get 30 minutes with the way that I'm recording, so let's go through this. So we'll start with the bottom one first. Now, the reason I picked a lot of these companies, these investments, was because I've previously invested in them and they've done well for me. So you'll see that for the moment, the Visa is currently trading at $336.74 US per share. So I invested, and remember, this is now changing from the New Zealand dollars that I had sold when I sold my investments to reinvest it. It became this $3,013.29. Now I had 6,000 in each of the other New Zealand funds and New Zealand businesses, but half of that, based on the US currency, became this. So you can see that gave me 2,961.8669 units. So that is the units. There you go. You can see the unit is this fund is 97 cents, basically. It is based on this. So it does go based on the 336,000 as well. No, sorry, $336. So it is down 4%. So 4.14%, meaning I'm minus $124.88 on that. I'm fine with that. Visa is one of those ones that it goes up and down. It's doing quite well in my normal shares, not so well on my KiwiSaver, but being down $124 is not that bad. Okay, next one is Berkshire Hathaway B. So not Berkshire Hathaway A, which is what I currently have. This is Warren Buffett's one. For a while, it was down quite a bit more. It was down about 6%. I have it down 3%. Again, this is my first year doing the US shares on my KiwiSaver. I will reevaluate per year how I'm going. So as you can see, I've got 3,041 units. It's based on $470.63 US. Again, the same amount was always put in because that's how much it was split. And then I am down 3.37%, meaning I'm down $101.61. Meaning my total investment value for that is $2,911.68. Again, 97 cents is the share price for this particular fund. Costco. You guys know I love Costco. I have recently just hit my first full share of Costco, so I'm really happy with that. As you can see, I'm down 0.08%, meaning I'm down $2.44. Again, same amount was investment, but it means my current investment is $3,010.84. But I have 3,042.17 units. So as you can see, we are starting to get back into the plus, okay? Same as the Coca-Cola. Now, when I first invested in these, it was right when Trump did his fun stuff, and all of these were down, and I bought high, and it's starting to go better. So I'm fine with that. No, Coca-Cola, $70.74 per share. I'm currently up $9.80. So as you can see, that's $3,023.09. Up again 3,001.18 units. And that's based on the $70.74 US per share. Right, so as I said, this is the brand new one. So I've only just recently tried to invest in this. I've only put 9 cents in. I'm at 1.13%. So this is because I haven't added any new money into my investments. When I do, this will increase. At the moment, I have a current split of 60% of my money going into the Sharesies US500 Base Fund, and then 40% across everything else. So that's basically about 5% per 8 or 9 companies, basically. Right, next one we've got is the MasterCard. So MasterCard and Visa are ones that I've been watching for a while. This one's doing a lot better than it was. As you can see, it's currently trading at $574.3 US. I'm up 3.37%. On that 3%, that's basically $101.67. So as you can see, again, these amounts are all USD. So it shows $3,114.95. When I sell this, that'll be double. So around about 6,000-ish if we were to sell that right now. Next one we've got is the main one. So this is the base fund. Now, you got to remember, with my intention with these things, it is to put these in and just leave them. Like, this is based on the S&P 500. I harp on about it all the time. S&P 500. If you're brand new and you're starting, you don't know where to go, I say put it in the S&P 500. I am testing this. As you can see, for their fund, it's $1.146 per share, which means for my 36,000, I have 32,841 shares. And if I leave this for 10 years and it grows, then that will grow, and so will this. So at the moment, for my $36,157.61, I am looking at a 4.11% return, meaning this will be $1,485.20 US. So again, double that. It's another $3,000. And bear in mind that I've only started doing this, as you can see, on the 3rd of May. So it's only been June, July, August, 4 months, basically. And I'm already up almost 1.5 thousand, which is not bad. Okay, next one is Microsoft. So Microsoft is one of those ones that I know I should have invested in it a long time ago. I didn't. My partner did. It's one of those ones where I thought, now that I've got some money going in through KiwiSaver, I can do it that way. So as you can see, I put in $3,013.29 like all the others. Gave me 2,921 units, basically. It's trading at $529.24, and I am up 6%, meaning that particular one is up $182.64. Now, this does not sound like a lot of money. I get it. But this is the long game. Again, this is KiwiSaver. This is my retirement. This is the long game, not the short game. A lot of people think you got to go short game. You got to get more money, more money, more money. No. You sit, you hold, you wait. You invest in things that are going to give you more money. A lot of these are interest-bearing, dividend-paying shares, and that is why I am investing in those, because when those investments come in, they get reinvested into my KiwiSaver. That's automatically done for me, so I don't have to do anything. So now we've got ANZ. As you can see, this one is trading at $34.08 or 80 cents per share. When I bought it, I put $4,548.29. So this was more what I was talking about. It is up 23.85%. So it's up $1,084.85. This has been since, as you saw, February or March last year. So in a year, just over a year and a bit, it's gone up to $1,084 extra, which is not bad. Meaning my entitlement value for that is $5,631.42. I can guarantee you right now I would not get this amount if I was investing into the bank itself. And I am an ANZ member. I do not get that kind of return on my investment. It is funny that you make more money investing in the bank rather than actually putting your money in the bank. But again, it's a risk. That's the whole point. The big one is this one, Westpac. As you can see, since I bought it, it's now $37.06 per share. I put $4,449.02. It has gone up 42.31%. So that is a good one. So as you can see, almost 1,900 almost. So $1,891.82, meaning that my $4,449.02 is now $6,328.71. So overall, what does that mean for me? That means that, as you can see, as I'm putting more money in, they will get split across all of my investments. As I said, when we look at this, when I started 1st of March, $85,967.65. That's when I was on the state service retirement scheme. I built that. That took me 20 years. In almost a year and a year and 8 months, I've grown 17,000. Now, I can tell you with my state service retirement scheme, where I wasn't able to control anything coming in, the most I ever hit in 1 year was $7,000 gain. And that was on the balanced conservative, which now, because I can invest how I want it to. That is the main thing that I really want to get across with Sharesies and KiwiSaver, is you do get the chance to invest it however you like. And there are other funds that you can invest in. I am trialing this Sharesies US500. Don't get me wrong, when I first saw it, it was a bit of a shock to see it drop from 70,000 to 37,000. And it took me about a day to realize, the reason why is it's now showing in US dollars. So if you do change your KiwiSaver to this, or you're just starting KiwiSaver and you see it doesn't look like it's very much, don't stress, don't harm. It is because it's now showing in the US dollars. Now, as I said, say for example, I wanted to add a new fund in here, and maybe I wanted to get rid of the Coca-Cola, for example. What I would do is, and you have to know this, because I didn't know this when I first did it, you'll see the sell button. You need to sell your shares or your investment. So I could, if I wanted to, I could sell, all of this. And then when the money goes back into the wallet, it then gets distributed across all of the other ones that I've got, including any new ones that I add. So say, for example, when I added this one, if I add, so very soon I'll be adding my money that I've got so that I can make sure that I'm making more money come in and I get my $200 from the government, then that will then get spread across all of these. Now, this one will only get 5%, and so will these, but this will get the full 60%. So, yes, it is a risk. All of these investments are a risk. And if you want to stick it close to stay with balanced conservative, they do have funds. Sharesies do have funds for that. But given that I know a little bit more about the market now, because I've done the research, I feel quite secure and safe in investing in this particular fund. Because as my base fund, an annual charge fund rate of 0.09%, and it's based on the ETF that tracks on the S&P 500. Now, in the 2008 housing crisis, where the stock market almost crashed, like the one that we almost had with a certain president doing what he did, the S&P 500 was the only one that was still in the positives. So you'll see that the risk is not 7, it's 6. So yes, there is still going to be risk. But the S&P 500 and the Smartshees US500, which is based on, the Sharesies US500 fund, which is based on the S&P 500, means that they are always looking at the top 500 US companies that are producing enough income. So that is why I am sticking with them. The people from Sharesies did help me out. If you have questions, you can hit them up. I first went through their chat bot, and then I decided to make a call, speak to someone, because I was panicking. I was like, where's my money going? I've tried to do this, and literally on my way up to Auckland for Auckland Armageddon was when I did all of this. And so I called them, I spoke to them, and they were like, oh yeah, we can sort it out. And they did. They made it fantastic. They made it easy. And they explained what I'd done wrong. And that was that, as I said, I had not sold my previous base fund. And so only new money would get added into the US 500 fund had I added any new money into my KiwiSaver. So the other thing that's important to note is when you want to put your money into KiwiSaver through Sharesies, you cannot put it directly into the wallet, okay? Not yet. Hopefully that's a feature. We'll see. They announced it. We're still waiting to hear. But I will add my money through ANZ, my bank, and then send it directly to IRD, who will then distribute it to Sharesies, and Sharesies will then distribute it based on what I've chosen here. Okay, so as you can see, it did go down. Like we're not gonna sugarcoat it. It went down to 93,000, 90,000, and that was on the 9th of April. But I mean, 9th of April, 4 months later, it has gone up 15,000. So don't panic during this time. I know a lot of people do panic because they're like, oh, I don't have, I'm worried about shares. I'm worried about this. I'm worried about that. If you don't invest, you will regret it. I rip the bandage off. I tell you straight. That's a simple thing. Now, I will say thank you very much for watching. This is basically the end of this video. You do not have to take my advice. You can take your own advice. Please do feel free to like, share, comment, subscribe, all that fun stuff. I really appreciate it. I appreciate you guys watching, and honestly, I just want to help you because I'm a guy that used to be in quite a bit of debt and didn't even really think about his retirement, let alone think he could retire. And now I have that opportunity where I can now tell people, hey, this is what works for me. It may not work for you. Remembering that, as you can see, a lot of these companies are in the positives now. So if you bought it now, it would go down. The first thing you do is buy it, and you think, oh no, I've lost my money. Just wait. Buy, hold, wait. Until next time, guys, as always, I love you and good luck.